Dear friends, welcome to weekly view on markets. Market recovered from last week's lows and bounced back from support levels. Markets rallied hoping for Russia-Ukraine peace deal and India rating upgrade by S&P Global. Markets came under selling pressure on Friday and managed around 1% gain for the full week. Mid and small cap indices outperformed during this week. Market is expected to continue consolidation in a broad range. While we see buying support at lower levels, there is selling pressure at higher levels. Earnings of the companies is not good enough to allow a sustainable rally in the markets. And liquidity in the market does not allow the market to fall in a big way. Considering all these and technical factors, the short-term view is clouded with various events, but the long-term prospects of the market looks attractive. Investors can invest with the 2 to 3 years view to get better returns. Nifty closed at 24,870 with a gain of 238 points, that is 0.97% for the full week. Bank Nifty lost 192 points, closed at 55,149. Mid-cap index gained about 1.99%, gained 1,125 points, closed at 57,629. Small cap index gained the most, around 2.12%, 372 points, closed at 17,919. India VIX is quite steady at around 11.72. The fact that India VIX is quite steady shows that there is no much panic in the market. Investors' confidence seems to be quite good in the market. Now let us look at sectoral performances. Most of the sectors gained during this week. Auto sector gained around 5%. Realty sector, public sector companies, manufacturing, FMCG all gained 2 to 3%. Information technology, metals, infrastructure sector, oil and gas, commodities all gained between 1 to 2%. Healthcare, pharma, private banks all consolidated with around less than 1% gain. Consumer durable lost around 1.17%. PSU banks lost about 0.39%. NBFCs lost about 0.06%. The overall outlook for the market is that of a consolidation. We have seen market recovering from the support level during this week, and at the end of the week we have seen a selling pressure. That means typically market says that it is in a consolidation zone. Now let us look at technical charts. This is the daily chart of Nifty. We can see that market corrected and took support from this line. Now it has gone above, and when it come to the middle of this band, that is not on the top side, this is 25,669, and mid range is around 25,500. So when it is coming around this level, we are seeing 2 days of selling in the market. So that means ideally market is likely to stay in this band of 25,700 on the higher side, and on the lower side is around 24,500. This is the chart of Nifty Mid Cap Index. Here also we see support at the support level of 56,100. From there, market has rallied for a week. Now, again at the end of the week, we have seen selling coming. So typically, the chart indicates that market is consolidating in a range of 59,900 on the higher side and 56,250 on the lower side for Nifty Mid Cap Index. This is the chart of Nifty Small Cap Index. The story remains the same. Small cap index is consolidating in a range of 17,500 on the lower side and 19,000 on the higher side. This is the chart of Bank Nifty index. Bank Nifty index has undergone a correction. In the beginning of the week, it gave a rally and selling pressure. Now it is again come back to the support level. I expect that Bank Nifty should pull back from here and it should remain in the range of 55,100 on the lower side and 57,600 on the higher side. Now let us look at some of the macroeconomic fundamentals. Macroeconomic parameters of Indian economy continues to remain quite stable and they are quite good. RBI forex reserves for the week is at 695.1 billion US dollars. It has gone up by 1.14 billion US dollars. RBI governor is quite confident that the present forex reserve can take off any shocks in the economy. Foreign exchange rate is at 87.52 rupees per dollar and dollar index is steady at 98.73. A stable rupee is quite good for the economy and also it helps the companies to plan their businesses, especially export and import oriented businesses, as a rupee dollar rate affects their business. A stable rupee is good for the businesses. Brent crude price is at 67.73 US dollars per barrel. As long as the crude price remains below $70, it is quite good for India as our major energy requirements are imported. So our import bill will be less. That will help to reduce our import bills and consequently the inflation will be under control. Our forex reserves will be preserved. So a lower crude price is very good for Indian economy and also for the markets. Gold price has closed above 1 lakh level. It has 1 lakh 760 for 10 grams 24 carat. FIIs have sold 1,559 crore during this week. On certain days they have bought also, but overall for the full week they are sellers. But their selling has reduced from around 10,000 levels to 1,500 levels. So that is quite good. DIIs continue to buy. They have bought 10,388 crore in equity during this week. So continued SIP inflows from the retail investors, which is coming into market as DII money, is supporting the market at lower levels. Flash HSBC Composite PMI has come out for the month of August. It is at a record high of 65.2, indicating an accelerated growth in the Indian industry, both manufacturing and service industry. Because this is a composite PMI. So all these factors indicate that our economy is on the right path. It is on a growth path. One more important thing has happened. That is, S&P Global Rating has upgraded India rating after 30 years. So this is a big positive for the markets. When the credit rating goes up, the Indian companies will be able to raise foreign capital at a lower rates because of the rating. It is just like a CIBIL score for individuals. So the India rating is going to help the companies in the future. With all these good factors also, earnings recovery of the companies is still elusive due to one or the other reasons. It will be difficult for the markets to rally from current levels without improvement in the earnings of the companies. The last quarter results are over, and the overall performance is not very encouraging. The company's revenues have gone up by around 8-9%, and profits have gone up hardly by 6-7%. So the present market valuations needs 15 to 20% earning growth. That is why market is struggling. It has lot of liquidity, lot of DII money is coming into the market. That is why it is sustaining. But it cannot go to higher levels on a sustained basis unless there is recovery in the earnings growth of the companies. While short-term view is clouded because of Russia, Ukraine, Israel, Hamas, then the trade talks between different countries, India, US trade talks, all these are clouding the markets in a short term. But long-term prospects remains good for the economy as well as for the Indian markets. Investors have to have a long-term view and they should invest in Indian markets. They will get good returns. So this is all for this week. If you like my video, please subscribe to my channel. You can share with your friends. You can ask your questions. We'll meet again next week. Thank you.